Hi there. In this video, we're exploring a new take on a well-known trading strategy, the modified golden cross. You may be familiar with the traditional golden cross. It's when the 50-day moving average crosses above the 200-day moving average. It signals a possible time to buy. On the other hand, a bearish crossover, also known as the death cross, occurs when the 50-day moving average crosses below the 200-day moving average. To adhere to YouTube guidelines, we'll simply refer to it as a bearish crossover in this video. Let's start by adding the first moving average with a period of 50 and color it blue. Then, add another moving average with a period of 200 and we color it red. You can choose between simple or exponential moving average, but I personally prefer exponential. Experiment with different types of moving averages and adjust them to your instrument or time frame. To take things to the next level, we're adding a secret indicator to give us a more comprehensive view of the market, the RSI plus BB plus dispersion by Mr. Mozart. First, let's go over the basics. The relative strength index is indicator. That shows us the strength of momentum for an instrument traded. Bollinger Bands set an upper and lower limit to show when the price of our instrument is high or low, relative to its recent activity. And Dispersion Band break signals about the increasing volatility over the set period of candles. So instead of the regular RSI, we'll use this 3-in-1 indicator, which combines 3 different types of information mentioned above, and will give us the confirmation to enter the trade. Let's make some tweaks to fit our strategy, and later I'll explain how it works so you have a general understanding. We won't be using the 30 and 70 levels at all, so let's remove them in the style section, and you can also remove the background. Next, head over to the settings and change the basis period to 50. With all indicators ready, let's get into our strategy rules. The strategy called the golden cross might lead one to believe that a trade should be entered when the crossover is observed. But this is not necessarily the case. Instead, we'll enter on a price pullback. In order to confirm the trade, RSI with dispersion is used in conjunction with the golden cross strategy. During a price pullback, the RSI must not cross the bottom Bollinger Band, but instead should cross back up above the dispersion band, indicating an increase in upward momentum. The entry is made when a candle closes above the 50 EMA. The stop loss is placed below the recent low, and the target should have a 3-to-1 risk-reward ratio. So now you understand the rules and principles of this strategy. Let's take a look onto another example. Here's the golden cross. Price pulls back and here's the candle closes above the 50 EMA. While it's still above the 200, the entry is made when a candle closes above the 50 EMA. The stop loss is placed below the recent low, and the target should have a 3-to-1 risk-reward ratio. Now, let me show you the example when the RSI has crossed the bottom Bollinger Band and crosses back up. Why it's not recommended to take a long trade after this. This cross of the bottom band signals the shift of momentum and indicates that upward momentum is weakening. Although there is a chance of catching some trades, the probability of success is decreasing. Now let's have a look on the bearish crossover. The 50 EMA crossing down to 100 EMA. Price pulls back and here's the candle closes below the 50 EMA. While it's still below the 200, the RSI has not crossed the top Bollinger Band. Crosses and closes below dispersion band. Here's our entry candle. Stop loss above the recent high and target 3-to-1 risk-reward ratio. Here's another short example. The 50 EMA crossing down to 100 EMA. Price pulls back and here's the candle closes below the 50 EMA. While it's still below the 200, the RSI has not crossed the top Bollinger Band. Crosses and closes below dispersion band. Here's our entry candle. Stop loss above the recent high and target 3-to-1 risk-reward ratio. By using all these indicators together, we get a much clearer picture of the market and can make smarter trades. But remember that no strategy is foolproof and there are always risks involved in trading. Thanks for watching. If you have any questions or thoughts, drop them in the comments below. And don't forget to like and subscribe for more trading strategies, indicator reviews, and also tips and tricks. Happy trading!